Good morning, everybody. So now that yields have stayed high for a little while this week, I'm going to go over mortgage strategy in this video. Also going to go over oil later on in the video as well. Firstly, I have to do this in every video now. I'm Michel St. Pierre. I'm a mortgage agent licensed in Ontario, based in Brantford, Ontario. If you have any questions about your mortgage, whether renewal, refinance, or a purchase, reach out. We'll look at it. No problems there. Our consultations are free. If you like my content, please share, comment, and subscribe. It really helps me out. So first off, these yields have been going up because the core inflation in Canada has been going up. So that means fixed rates are more than likely going to increase this week. We do still have rates in some cases, some packages still starting with a 3. That's probably going to go away this week. Most, if not all, interest rate packages are going to be starting with a 4 by the end of the week. So if you're out shopping for a home, go get that rate lock in now. If you're up for renewal within the next 90 days, it'd be a good idea to contact your broker or me to get that rate lock in now before those rates go up. Also, if you're refinancing, get on it now. Don't wait because those rates could go up. That's if you want a fixed rate only. Personally, right now, what the good strategy would take the variable. Even though I still think next month, Bank of Canada's rate announcement's like 50-50 on whether they're going to cut or pause. I think after that, it's going to be more than likely there will be more cuts, possibly 2 more quarter point cuts, maybe even 3 because of the state of the economy. Now, let's take a look at oil. Oil prices have been going down slightly today. As we went over yesterday, they went up because of the threat that Israel posed against Iranian nuclear facilities. They threatened a strike. So far, that strike hasn't happened. Now, when it comes to future oil prices, keep in mind we are going into what seems to be a global recession. So oil demand is going to be going down in general, just based off of lack of economic activity. Also, OPEC is considering more production hikes, which is going to further decrease the cost of oil because, as you know, supply amount goes up, supply and demand. If there's higher supply and less demand, that's going to change the cost of oil downward, which can really affect Canada a lot because of our oil sands in Alberta. Their oil can only go so low per barrel before they really start to get affected. That's something we have to monitor. Also, we have to monitor oil because oil is a big component of inflation. Oil is on every type of product that we have. Some derivative of oil is part of it somewhere, whether it's the trucks to drive it or the machines to make it or the product itself. So that's important. I do find interesting, though, that even though we were told that carbon taxes weren't going to increase our inflation data, one of the reasons why headline inflation came down lower was the removal of the carbon tax. So remember, you don't always get the whole story.